That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
Again, welcome to the Talking Real Money podcast. I'm Don McDonald. Talking Real Money is a show, a podcast, a service that is devoted to helping you make more money, to make money make more sense, to make it a lot simpler to deal with, to explain investing and real investing. That's what we call it. We call it real investing because it's different than what most of Wall Street still wants you to believe. Wall Street is almost anachronistic anymore because it's not about investing. It's about gambling still, and that's not what real investing's about. That's what we talk about here on this show, though. And you can literally contact us anytime with your questions by calling 855-935-TALK, 855-935-8255, 24 hours a day. Remember, this coming Saturday, which is what is Saturday? Thursday, the 9th of November, I'll be doing the radio show live by myself. So I'd love to have you come by and kind of be my co-host. Tom is taking off, and you can call me live this coming weekend between 3 and 5 p.m. Eastern, noon to 2 Pacific at 855-935-TALK. You can also send questions in by going to talkingrealmoney.com, hitting the contact form. One quick thing before we get to today's question. I have recently finished up a number of videos, some narrated by Tom, some narrated by me. 3 of those now are up at talkingrealmoney.com. All you need to do, if Squarespace is actually working when you go, they've been down today, go to talkingrealmoney.com and you'll see a picture of a guy with a television for a head and a money $sign on it. Click on that and it'll go right to the videos that we have up there, and you can watch those. There's one about income from your savings. There's one about what I was just talking about, the real investing, the past, the present, and the future of real investing, and one about when to start Social Security. Coming up in the next couple of days, probably tomorrow, if all goes according to plan. I'll have the 4th one up, which is on how to find a fiduciary advisor. So we're going to start putting our classes free online for you. So check those out. Tell your friends. If you have a topic that you think we should cover, call us on the 855 number, 855-935-TALK, or drop us a note, talkingrealmoney.com. Click on the contact form. And it's just that easy. Now, today's question comes from that contact form, and it's pretty short and sweet. Please review the following piece, and he gives me a link to a New York Times article that I meant to mention last week, I think, or earlier this week. It's called, it's about the endowment model versus the 60-40 split. He says it's a discussion with no mention of indexing. Oh, yeah, I read this piece. And, oh, yeah, I think the New York Times is out of their league on this thing. I think it's a terrible article. It's written by Paul Sullivan, who writes about the rich. And, well, I guess I can see why he took the position that he took. First, he starts the article off with this sentence. Now, how irresponsible is this sentence? This was from last Friday. This was a week of contradiction for investors looking to divine the future in the stock market. Paul, really? Come on. You got to be smarter than that. You wrote a couple of books. You really think people can divine the future of the stock market? And he goes on to say the S&P closed at a record high. Well, okay, it's been at record highs before. Do you know it's done? The whipsawing of the market, he says, raised anxiety for investors eyeing their portfolios. These investors, particularly affluent ones with greater access to financial products, Oh, yeah, you rich people, you get the good stuff. That's that. Oh, that's that other thing, is that there are special investments for special people. Paul, you are living in la-la land. So he says that they're more likely to be approached by advisors with new strategies to take advantage of a moment like this. And one of these strategies is the endowment model. And you're all going, huh? What's the endowment model? Oh, well, I'll tell you. That's private equity, private deals, special deals, hedge fundy kind of deals. He compares that to the modified 60-40 investment portfolio, which is a split between equities and fixed income. And, one of its selling points is liquidity. Wow. Yeah, that's a huge selling point, because you go on to say that private equity is totally illiquid. Well, that's nice. I want to give my money to someone who won't give it back. And you have to commit to them for a number of years, 5 to 15, but sometimes longer. It's a lockup. And you may get a capital call. They may say, oh, hey, Mr. Rich Person, you have lots of money. Send me some more, because what we meant to do didn't work out. And the minimums, he says, are high. Well, okay. Who do you honestly think your audience is, Mr. New York Times? Really? Do you honestly think your audience is the 1%? Are those the only people reading you? Then he goes on to say that some companies like iCapital Network let high net worth individuals invest smaller amounts because they can pool their money together. iCapital Network. Well, I went to iCapital Network, and they, of course, tell you all the stuff about how bloody risky these things are. And risky is an understatement. These things are outrageously risky. Yeah, you might get a higher return. Why? Because you're taking more risk. And while you can set up a 60-40 index portfolio with Vanguard and pay, about 7.5 basis points, that's 0.07 of 1%. These endowment portfolios typically cost, this is directly from iCapital's website, 1.5 to 2% per year. Oh, but that's not all. Oh, no, there's a plus. When they do well, what do you have to do? You give them 20% of the return. However, if things go badly, well, send us some more money through a capital call, okay? Oh, well, that sounds good. So how have funds like this actually done for regular old people like us? Pathetically. You remember the bet that Warren Buffett made 10 years ago with a hedge fund manager? The bet was, hedge fund manager said, a portfolio, the hedge fund index, a broad portfolio of hedge funds, will outperform the boring old S&P 500 over 10 years. And the hedge fund manager lost the bet because the S&P 500 beat the tar out of hedge funds. And the hedge funds continue to do badly. The S&P 500, as the article said, it's made about 20% this year. Its total return about 20%. How have hedge funds done? Well, the Barclay Hedge Fund Index says that so far this year, they've returned about 8%, or less than half what the boring, we wouldn't even suggest using it, S&P 500 fund has made. How about in 2018? That was a pretty bad year, right? That's when they shine. They shine in bad years, they say. That's why you want them. Well, the loss in 2018 for hedge funds, the hedge fund index was 5.25%, when the market actually posted like the S&P 500, little tiny gain. This is terrible advice. This is just deplorable advice. Most of the time, unless Ron Lieber's writing the article in the New York Times, ignore what they say. They're all mostly financial idiots because they like to think they're super special, smart, 1%er kind of people. And we've got to tell people what to do and tell them all about the special stuff for them. But no. There's nothing special out there. You're going to get, if you want truth in print about money, really there are two major journalists you should read. Ron Lieber at the New York Times and Jason Zweig at the Wall Street Journal. And then listen to Don and Tom, because we're not going to tell you, we're not going to blow this flippin' smoke at you so that we suddenly appear to be so smart. We know more than everybody else. Yeah, we don't, because you can't. Because what we're asking people to do is know the future. And you can't know the future. And don't expect 12% per year either, Dave. All right. I think I'm done. I'll do another one later. And remember to call anytime at 855-935-TALK, 855-935-8255. That was a great question because it allowed me to really get going. And it is an irresponsible article, in my opinion. Totally irresponsible. Go to talkingrealmoney.com. If you need help from an advisor, go there and we will, I promise you, this is not a lie, we will help you for free. You can set up an appointment with one of our advisors and say, I just need you to help me with this thing. And we'll do it. And you won't get a high-pressure sales pitch. Promise you. If you do, call me live on the radio and say, Don, you lied to me. Because I'm not lying, so I'm pretty confident it'll be good. Let's see, what else? Oh, yeah, go check out the videos at talkingrealmoney.com. Just click on the guy with the TV head. Just TV head guy. Go check them out. We'll have more coming up. We're going to keep adding new ones every month. And, oh, yeah, also, Real Investing Journal is getting ready to go out to everybody. So if you have not subscribed yet, go to realinvestingjournal.com and sign up so that it hits your mailbox every month or so. Bye. Have a great one. Talk to you soon. I'm Don McDonald.
Talking real money.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only.
Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times.
Also, as much as you want it, no one can accurately, consistently predict the future.
So past performance doesn't tell you a darn thing about what the future will bring.
Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities.
Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor.
Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures.
Are we done now?